Let's get some clarity on this. She has the toughest job on Wall Street with Bank of Montreal. She has to put up with Brian Belsky and Ian Lincoln in the same conference call. Jennifer Lee joins us now, senior economist. Jennifer, to what we heard from Damian Sassower, overwhelming awe is a presumption of a growth slowdown. Where will real GDP head?
Good morning, and thank you very much for having me on. Yes, well, right now it looks like GDP is headed lower in terms of growth. We're not looking for a recession in the U.S., but the risk of this continues to rise, just given, obviously, this escalating higher and higher tariff war. I'm losing track of all the percentages right now, but it looks like, we are maxed out at 145% on one side, 125% on the other side. So we'll see how this plays out. But this is, obviously not good news for U.S. consumers. You're going to be paying higher prices, even though, we brought all the other countries down to a baseline of 10% tariff. But, prices are heading higher, and this is what's going to hit the U.S. consumer, and this is what's going to cause the slowdown.
Are you going to a negative statistic on real GDP for this present quarter?
No, we are not. No, we're not. We're still looking for growth, but slower, much slower growth. Right. And it's not just the consumer, by the way. It's also business investment. And, even though a lot of these, this invitation, we can always say, to bring more investment into the U.S. is helping. We're seeing, lots of money coming in now in terms from different companies promising to build and to hire. But at the same time, it's just very hard to make any real strong with conviction investment decisions in this sort of uncertain environment. So I think that's also going to offset a lot of this incoming investment.
Jennifer, as you know, overnight, Beijing raised their tariff on the U.S. to 125%, but the accompanying statement stood out for me. They said, we're not going to raise anymore. You know why? Because it doesn't matter. We're not trading with them anymore. I mean, so in your models, are you modeling zero trade between China and the U.S. on a forward basis?
Well, it certainly looks like we are heading in that direction, but I can't see I just can't see how that is going to happen, just given how much reliance there is on both countries on each other for all this trade. So there's just going to have to be, they're going to have to start talking at some point. But right now, I'm very curious to see, number one, what the reaction from the White House is going to be, and number two, what other tools are going to be coming out of the toolbox, to borrow the language from monetary policymakers about what else can be used. If we are hitting that max of 145 and 125%, what's next? So we're going to start talking about export restrictions on rare earth minerals, for example, on perhaps Treasury on the Treasury holdings. I don't know what's next, but but if we're done with tariffs, there's probably a lot of other things that they can use.
Jennifer, many are referring to the 90-day window by Trump as him having blinked, right? I mean, he saw the devil and he basically blinked. And I'm just curious, if you're sitting there, you're in Beijing, you have to enter into negotiations, or for that matter, any country is entering.
Why do they have to negotiate?
Well, I mean, only if they want to keep trading with the U.S. Or you're right, maybe they just sit tight, sit on their hands, and let them blink back again. I mean, that's my question, Jennifer. How do you negotiate with the U.S. now that Trump has just put this 90-day window in? It does seem like he did blink.
It does. It looks like he saw the cliff. He goes, oh, there's the edge of the cliff. I'm going the other way. There are a lot of different interpretations of what happened. But, for one, I think all of us are very relieved that he did that. He did put in that 90-day pause, and I think that should be very much welcomed. And that was definitely a big step back from the brink, and I think that's what everyone should sort of focus on, and the fact that that is good news. Now, what's going to happen next? Again, that's anyone's guess, but I would really, really hope that both sides are going to start saying, okay, let's talk this out. Let's plan a summit of some sort in Beijing or in Washington D.C. or somewhere neutral, wherever that's going to be now, and start hammering out what are we going to do to make all of this, to make both sides happy, because the global economy is really at stake here.
Jennifer, what's so important here is it's this oddity on a Friday of, wow, the American economy is great. Morgan Stanley out now has a return on average common equity of 17.4%. JP Morgan even better than that. We're moving from a 3% real GDP economy into some great mystery. Can the banks call Secretary Bessent and just say, stop this because of the liquidity issues, the bond issues, the dollar issue? Are you confident into the weekend that the big banks have the power to sway the secretary?
I would like to think that will be the case. However, I think the administration has bigger issues or bigger picture that they're focusing on. I mean, I believe President Trump did say that that we're going to be entering this this volatile period right now. Can't remember his exact words, but it's going to be some choppiness in terms of the economy, in terms of prices. So we have to. What they're trying to do is look through this and ultimately make this right this wrong. What they're saying in terms of global trade.
Jennifer, I got gold up $56, 3234. I've got SOFR 10-year, folks, which is sort of the heartbeat of the trust market, out 2.9 standard deviations off the trend back to the fall of last year. Aren't we at a point where the big banks, Diamond, Moynihan, the others, can call them up and just say, stop it?
Again, they can, but does he want to show that he is bending to, to corporate America? That's, the sort of like Fed Chair Powell, right? When he's on his cuts, people are going to be questioning, is he doing it because of political pressure, or is he doing it because he's trying to support the U.S. economy? There are going to be a lot of questions about this, and tough questions, of course, and they will be posed.
Jen, we've got to run here. Damian, I got to run, but this is too important. I got Loonie 141 to a strong Canadian dollar 139. Can the next Prime Minister of Canada, whomever it is, can they stand a strong Canadian dollar?
I don't know. I would call it right now very strong. I mean, it's certainly better than what we had before. But I'm going to be curious. I mean, our election is April 28th. Whoever the new Prime Minister is going to be, whether or not there's going to be a majority government or not, what measures are they going to do to strengthen the Canadian economy? And that will be, that's the next focus.
Thank you so much for being with us today. Jennifer Lee, huge value add with BMO Capital Markets.